You know, when you start thinking about credit, it seems to be one of those things that very few people understand, and we are lucky to have David Murphy join us who does understand it. David, you know, we were just talking about the negatives on the credit. It does seem to be the intuitive items. You know, if you don't pay your bills, probably credit isn't going to be as good. If you pay your bills late, credit isn't going to be as good. If you, pretty simple. If you don't pay your parking tickets and they go to collections like that, then your credit's going to go down. But there's a lot of items that people maybe don't think as being negative that actually will lower your scores. Can we talk a little bit about those?
There are quite a few different possibilities here, and people sometimes will say, "Hey, I've got perfect credit, but my scores are still low. I'm only a 670, and how come I'm not 720?" And you got to take a finer look at the credit report and find out why. If you don't have at least 3 positives on your credit report, then you need more credit history, because history represents 30% of the FICO score. So the more history you have, the more higher score
now,
you should have.
Explain what 3 positives means.
Well, 3 companies that are reporting to the credit bureau. So Nordstrom's, Macy's,
sure,
MasterCard, Visa.
Another MasterCard Visa. I mean, that's like
even
the banks.
Les Schwab, subscribes to the credit bureaus.
Les Schwab?
Equifax.
Oh, if you finance the tires?
Yeah.
Oh, never thought of that.
Pricey tires.
So, Victoria's Secrets.
Angel cards.
Oh, gosh.
So, one of the things that you want to look at is how much credit you have. So if you have no credit, that's as bad as bad credit. No credit means no deal.
Yeah.
So the other thing,
and I mean that's a score based thing. I mean, because we see it in the mortgage side. There's nothing.
Right, no score.
And if maybe if you're 18 or you're 20 or and you're going to get a credit card because they give them to you like candy or they give them to you like beer in college, then that's how you build it up. But the people who don't ever go about doing that, they really do hurt themselves.
Well, another way you can hurt yourselves are by too many inquiries. And the biggest way that happens is for the couple that go shopping for a car on the weekend. And so they go into one dealership and they say, "Oh, yeah, we like this car," and they pull their credit. Not only do they pull their credit once, but they're trying to finance them. So they'll go to 4, 5, maybe even 6 different banks, and they get turned down. So they go to the next dealer, like they're going to have new information or they're not going to see the same information. And by the end of the weekend, they got 20 inquiries. You multiply 20 inquiries times 3 to 5 FICO points. That's a 60 to 100 point hit in a weekend.
And they should have called Pure Money Mart. I don't know why.
It's the same thing with mortgage companies, too.
Yeah, absolutely. But typically we don't pull them with every other bank. I mean, we don't pull one that equals 5. You pull one. But
that's why you need to know what they're going to be seeing.
Yeah.
Okay, so if one of the 3 bureaus is clean and the other 2 have a couple parking tickets or late pays, then you go in there and say, "Hey, I want you to pull my TransUnion, but that's it." Okay? That's the better score. They may or may not be able to do that. But you can call ahead of time and talk to a finance manager and find out which bureau they're going to pull on you so that you know ahead of time. You got to do your homework.
Doing your homework, understanding the different scores, but let's get back into the things that maybe people don't think are negatives, because they like credit card balances. People think if they pay it on time, even the minimum every single time, that won't, that their score would be okay. But that's not necessarily the case.
Couple things with credit cards is if you close down a credit card and you say, "Okay, I'm not going to use this card anymore," if you don't contact the creditor yourself and say, "Hey, I'm closing this," then at a certain time, the creditor then says closed account. But what happens is you have a connotation on your credit report that says closed by credit grantor instead of closed by consumer. I closed it in compared to them closing it down on you. Now, you may not have any 30, 60, or 90 late pays on there, and it says closed by credit grantor, and it creates a question mark. Why did they close it down instead of you saying, hey, I closed it down because the interest rate was too high? That is a potential negative. Another one is your credit card balances. If you're trying to buy a home, you need to lower those credit balances that you have on your cards, because anything above 70%, 50% of what the high balance of that particular card can lower your score. I tell people bring the balance down to at least 47% of what the high credit limit is on that particular card.
So that's the debt to income ratio.
Yes.
Okay.
The other thing is
that's your debt to credit ratio.
Oh, okay.
Yeah.
the other thing is if
That's right.
you're a cash and carry type of guy, not using credit can hurt you. Okay? Other thing is if you don't have particular trade
It seems
lines.
like quite the conundrum.
Yeah. If you don't have a
If you don't need credit, then
revolving open installment account, they want to see.
Do you think that, okay, so when we have not using your credit, not enough credit, too many times going to get credit. I mean, there's like this sweet spot, right? You can't have too little and you can't have too much. You just have to have this perfect little spot.
It used to be that if you had 3 to 4 MasterCard/Visa, you're in the perfect spot. Anything less than that, anything more than that affects your score. Another thing that I try and tell people is do not write down on applications that you are self-employed. Put down a job title, GM, Executive Vice President, President, CEO, CFO. Don't put self-employed because it implies cyclical. You are being paid cyclical, which means it can go up and down. You want to imply that you get a regular paycheck. Mm-hmm. Month in and month out.
So when you start looking at how many factors go into it, and Dave, we just have about a minute left before we have to go to break, but you look at all these different factors that wouldn't appear to be negatives, but still are. And I've heard rumors about some of the credit laws being rewritten. Is this something that people address on a daily? I mean, you must deal with it on a daily basis where I didn't know. Like, I don't know people don't know. Your average consumer doesn't even know how to work this huge element of their finances. That's kind of a scary thought, isn't it?
It is. They don't because they're not been educated. And as we said, do your homework ahead of time. Get a copy of your credit report. Too many times people are calling me and say, hey, I got 45 minutes to close on, or 45 days to close on this house, and I need to get all this crap off my credit report. I say, forget it.
Yeah.
It's just not going to happen. I mean, the first set of results from credit bureaus is going to take 30 to 45 days. And generally I say expect 4 to 7 months for this process to get your scores going up in the right direction.
Sure. Well, David, thanks so much for joining us. We do have to go to break. Again, David Murphy, Director of Operations with Credit Insider Club. When we come back, Charlie Carter joins us, Homebridge Builders, to discuss a little bit about, some of the other things maybe people don't get. That's why you call a plumber. Maybe that's why you call an electrician. I wouldn't do it myself. Charlie does it. Talk to you soon. We'll be right back.